Good day, everyone. Alice here from Safi Financial Network. Today is October 25th, 2023. Forgive me about late analysis. So I had lots of things to do, and forgive me about that. So it's kind of like late. I'm not going to cover all stocks, individual names as usual. I'm just going to give you analysis and update for three main indexes, S&P 500, Nasdaq, and US 30, and also going through gold and US crude, and one specific chart that I just want to discuss. So 6 charts in overall, and forgive me about this. I promise I will get back to the normal analysis tomorrow as well. So starting with S&P 500, obviously we had very, very ugly red days. So market just getting up here, create this pivotal point, stop hunting, going all the way up. Yesterday we had followed through, but getting into this FL or flag limit, but today smashed down. Volume was pretty light during the entire session, but after hours, after Meta earning, volume just spiked up to 93 million. So today traded 93 million SPY, which is S&P 500 ETF, and goes down sharply. After hours, we had this gap. And I should say this gap is kind of like a capitulation gap. And this is the way that market forms the bottom. But it's pretty hard to call the bottom, but we are pretty close. So market just getting down below this demand area. And right now we are getting into a decisive moment. So S&P 500 right now, future market is 4158, 4160, and we can get all the way down to 4100, but I'm not sure below that. So if market, for whatever reason, S&P 500 get close below 4097, so just be careful on this, 4097 daily, ideally weekly close. Below this, we are in a bear market, folks. So any rally could be a selling opportunity to getting down. But as long as we are above this pivotal point, which is very, very important pivotal point, specifically monthly close is coming next week. So we should just be cautiously slightly bullish. I know there are lots of fear in the market because bond yield is again hiking up. And also yield curve is uninverted now. So everyone is just flashing for a recession is coming down the road. I'm not sure yet because whenever we have an inverted bond yield or yield curve, uninverted yield curve, we will have a spike to the upside. And right now we don't have a spike yet. We are in a capitulation phase. We are getting into 41, 58, 56, but I should say can still go deeper. Probably tomorrow. Tomorrow we will have Amazon earning as well after hours. It's going to just have more volatility. Today we have Meta. Meta was pretty volatile. Like, first of all, Meta just came with the earning. Earning goes up and beat the expectation. Fantastic earning. Everything was great until press conference. They said just the metaverse and the cloud-based platform they invested, it was it was not profitable. So it was all expenses, and people, they don't like it, and they're just waiting for something to make excuse for a downtrend, and market just going down. After that, Meta even goes down. So don't be surprised. Despite good earning from Meta, Meta will gap down tomorrow as well. So in market open. But right now, S&P 500 is trading 4160, and it can go down to here. This area, I should say, could be a bottoming formation for a knee-jerk reaction to the upside. As long as we are below this downtrend, a corrective move, we are in a downtrend, but I'm not sure if that downtrend lasts forever because we are at a very, very important level. This is one of the best level for investors, traders, and still calling about a bull market is very tough in this situation. I totally get the frustration is around there, but as long as it's above this area, so I'm still slightly or cautiously bullish. Moving on to US 30, Nasdaq, which is after hours. It's just 4 minutes, they're 1% down. So you see that this is a 2-hour chart, pretty oversold. If I go to daily chart here, so you will see that we are at the bottom of this demand area. And still, there is going to be a chance to get down to here. So this wide range bar is very, very important, which is going to be 13,900 to 14,000. So this is the area that I'm looking for as a decisive bottom, coming along with the S&P 500, another deeper corrective move to the downside, probably Thursday, or I should say Friday. That could be the end of this capitulation corrective move to the downside, and we should see some reversals coming back. So again, 2 hard days are coming down the road, but those 2 hard days are going to be a good buying opportunity. So don't be panic if you just put your money on the side. This is going to be one of the good situation or opportunities for long positions. Stay on the side, stay tuned, because next 2 days probably good opportunities are coming. Moving on to US 30, which is Dow Jones. Dow hold up pretty well today, so still holding up now compared to the other ones. And I just had a comparison compared to Nasdaq and S&P. You see that Dow is forming a higher low. Again, higher low. I know it's after hours. This is kind of like a future market. It goes down another 96, 100 points to the downside, but still hold up this pivotal point, which is October low. So Dow still is in October low. This is October 2nd, October 3rd low. So very, very important. So money is flowing into defensive, healthcare, and also military is doing well for now. Energy hold up for now, and also precious metals, they're okay. So seems like money is getting back to the Dow to a defensive names, so that's why it keeps the momentum still holding up pretty nice this October 2nd low. If market is getting back to the upside, I should say that could be a rocket star for the next 2-3 months, because pattern-wise, it's pretty better compared to the other ones. And Nasdaq could be the second one. Moving on to gold, substantial move, still after hours, goes higher. So as you see here, just give us a minor corrective move after this rally. I was expecting gold is coming down to here for a great buying opportunity, but it seems like it doesn't. So, so far, gold hold up pretty well. And this, let me just zoom back here. This trend line broken to the upside. And if you go to monthly chart, let me go to monthly chart. So look at monthly chart candle and look at monthly chart pattern. This bull flag is fantastic. So it's getting to the beginning of a new bull run for gold. And gold can easily go to 22, 2300 by next 2-3 months. So gold is in absolute fire for now based on the monthly chart. And if you just look at the pattern is pretty bullish. So I like the pattern a lot. Because after corrective move, we are just getting back to another bull run for gold for a monthly chart. However, for daily chart, so as you see here, we are just forming another bullish momentum here. We can get up to 2010, 2021, and 2040. So that's going to be the next level for gold. I'm just still bullish, will remain bullish until certain points met. But right now, I look at my levels here. So I'm not saying gold can get here, but I should say gold has a very, very nice potential for at least new all-time high, which is gonna be around 2100 area. So we will see how it goes with gold. Moving on to the not last chart, because I want to show you another one. A crude, just getting back to the upside today. Still holding up this area. So pretty bullish, and also this one as well. So crude somewhere around 90 is going to be sellers are coming back. Somewhere around 80 to 83 buyers are coming back. So still ranging. Crude, as you know, get impact from geopolitical tensions. So if there is any like a ceasefire or peaceful event or news, which I don't think it's going to happen soon, crude just a smash to here. But if you see a very, very aggressive movement from any either parties, crude can spike up to the upside. Right now, it's just ranging and holding up this area. As I said, sellers took control above 90, buyers recommit back around 80. So it's kind of like a $10 range for now. And that's going to be the game plan for crude. I just want to show you one last chart, which kind of like very, very important. So this is PCC, which is equities and indexes. So put call ratio based on the weekly chart. And as you see here, we are getting into this important bullish momentum. So this means the rate of the put options are substantially higher than call options. And when we are getting to this level, which is coming from experience, we are kind of like a very close to the bottom of the market. So for better proof of this, I'm going to show you something interesting. So if I add S&P 500 chart to here, so you will see that even during bear market in 2022, here, 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 and here, every single time when we get there, market just form at least intermediate bottom or the final bottom. And even this one in March time frame, we are pretty close to a bullish momentum, a corrected move, and getting back to the upside. So this is a COVID crash. So this is a stock market, and where are we at? So this is a put call ratio. We are just getting into the bullish area as well. So this time we are getting pretty close to important levels here. Stock market getting here, S&P 500. And where are we at? We are pretty close to the bullish momentum. So again, bullish reading is coming with this chart. I just want to hit you. Even if we are in a bear market, should expect a knee-jerk reaction to the upside. And that reaction can get us to 4,300 or so for S&P 500 to get back to this trend line and then coming down. So be ready for another swing high. Again, next 2 days, probably that's going to be a capitulation. But after next 2 days, I should say next week, we can get back to the positive momentum. So we will see how it goes. That's at least my 2 cents for now. And we will get back to you with a better analysis or as usual analysis tomorrow. Have a fantastic evening. See you on the chart. Bye-bye.